Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the TheoTrade nightly video for June the 7th, 2018. And I just have one question for you. Can we get a pullback? Right? We're looking at a pullback possibility on the S&P, our 4 equity indexes, and some leading stocks. We'll take a look at the tech sector, particularly those titans of tech, and just asking a simple question of the market. Is this all you got? Is this the biggest pullback you can give us? Or are we going to be in for a couple more sessions of a pullback? And if so, what levels are important? And how can we trade this on an intraday or swing basis? We'll pick up with the S&P futures and then we'll zoom in. So we do have this breakout. On last week's evening video for you, I was taking a look at these levels and planning for a breakout. The market broke to the upside and gave us a range expansion play just shy of 2780. If this breakout continues, we still are looking for a rally up to about the 2800 level for the S&P. But I want to take a look at what's happening immediately with the S&P with today's price action and things happening in leading stocks. And the question simply as we ask this evening, is this it? Or are we in for an additional pullback, maybe to at least 2750? That's a play in the S&P futures, the Dow, zooming in here. And just for reference, I take a look at the daily chart on the left, mainly focusing on the daily chart, but I always have up, in my view, an hourly chart, and that's to the right. That gives us more bars or more information to make decisions. And if we're trading this on an intraday basis, we're typically using the 5-minute or lower time frame. If you are swing trading, mainly look at this hourly chart in conjunction with our daily chart, looking for breakdowns under today's low to trigger short sell positions just for a couple of sessions into Monday, maybe Tuesday. We know that the Federal Reserve is scheduled to raise interest rates at their announcement on Wednesday. So that is something to keep in mind as well. 25,000 is our mega spot for the Dow mini futures, and we've extended a little bit above that and not pulling back today. The Dow was the only stock market index that we follow that was positive. The S&P was flat. Nasdaq was down almost 1%, and let's focus our attention there. This is what we are looking for a logical, expected pullback or retracement against a resistance pivot. 7,200, just a little bit above that in the Nasdaq, with a 4 days in a row to the upside on declining or lessening bullish volume. For the most part, it would be logical to expect a pullback maybe toward the 7,000 level, but at least 7,100 where we are now. And so I'm using this as our pivot. I'd carefully watch 7,100 tomorrow to see if that's all she wrote. And if so, we continue this alternate thesis bullish breakout pathway, potentially up to 2,800 in the S&P. But if underneath 7,100, that would fill the gap and break us beneath Friday's gap and probably open the door toward 7,000. The Russell has been stronger, and we're seeing this breakout to all-time highs. Nasdaq just fell shy of those all-time highs, so the Russell went ahead and broke persistently through them. And it's at the 1680 level, just shy of 1700. It would be logical to expect one more, not asking for a lot, retracement opportunity or retracement outcome down away from 1680 down toward, in this case again, the 20-day exponential, and this price pivot just about 1640. We will by definition call this our dominant thesis, just if for only to say that if the market does not retrace, if it can even retrace a couple sessions, Friday, Monday, maybe Tuesday, then we probably will see alternate thesis, open air pocket, range expansion, short squeeze until the Fed's announcement on Wednesday. Quick checkup on our volume profile. Just shows us levels to keep a watch on as we go forward. This is the S&P again, 2780, little open air level to the value area extreme. Once again, just above 2740. That is a pullback logical target. If not, we will see additional expansion toward the original target from our breakout toward 2800. Not that much different in the Dow Futures. Its spot is going to pull us back toward 2486 or 24800. Nasdaq, we got our initial pullback test, which is the value area extreme. We like to frame things toward or away from, and today's session was framed in terms of movement away from 2700 or 7200 to 7120. Again, let's see what happens at 7120 and ultimately 7100. Because traders, this is a clear open air pocket. And if the Nasdaq can enter that pocket, we'll be right on our way to 7,000. And we'll be taking multiple bearish positions, just a 5-minute chart, retracements and flags, just like was the case on the way up. And the Russell bounce a little bit above its 1657. Let's call it 1660, just to make it a little bit easier to reference. And is at the midpoint of the low and high of today's sessions. We'll walk you through some pullbacks in individual stocks. We'll jump this back to the daily chart, starting with Microsoft. Now, Microsoft is a good example of a trade of a fade variety. Markets typically trade higher in uptrends, but they don't go straight up. If you are akin and enjoy the fade style strategies, Microsoft is a good example of how to set up short positions in extended 1, 2, 3, 4 days to the upside over the moving average with declining volume. And like anything else, let's see what happens next. Logic would dictate a deeper pullback to about 99 per share. That's logical. That's even expected. But of course, per our planning, it doesn't mean it will happen. Facebook did go ahead and pull back to its moving average. A little bit choppier behavior. Still uptrending, nonetheless. Same picture with volume and overextension. 1, 2, 3, 4 days to the row in the upside and a 4-day pullback. Facebook has achieved its downside target, 186.50. Beneath that probably takes us to about 183. So again, if the market pulls back steeper, Facebook probably joins the pullback. If not, we can see a logical bounce for Facebook here. Amazon, little animal of a stock, right? Multiple days in a row to the upside, 2 sessions of retracement. More than not. Even in this extended market, we get pullbacks to the 20. And again, that gives rise to fade, or strategies that call for bearish positions, swing or intraday, as a market moves away from, in this case, 1,700 per share toward the prior resistance, prior high, and the moving average just above 1,600. Remember, these are short-term trades only and short-term opportunities. And for Apple, not a whole lot to say beyond similar reversal candles, similar pattern in reducing bullish volume and its potential downside pullback from 195 to about 189 or 190. And we'll look one more at Netflix. Netflix had its rally up, breakout, right? Range contraction, a triangle. We kept calling for a breakout. Netflix gave us an eventual breakout, but now we're looking for a pullback. Nothing special, just a pullback, just a retracement. Where from? Just about 370 per share, down toward at least 346, maybe even the breakout beneath 335. Take a look at these with me, and if you're trading these, keep your intraday charts active. Look at the daily charts. Remember that markets typically, even if they're uptrending, still go through pauses. It's like running a marathon. You can't run a full marathon without taking a little pause. And even if the markets go higher, they need little pauses. We call these pauses pullbacks. And if you're so aggressive, you can trade fade methodologies from the high to the moving average or trend lines. And otherwise, look for the pullback to give us a good spot, potentially, to trade into the uptrends if they continue. Take care, TheoTrade. This is again Corey Rosenblum with your TheoTrade nightly video.